What if I told you this is not the first time that a sitting president has dropped out of the elections? Back in 1968, we had a very similar thing occur, and we're going to talk all about that in today's video, along with the key levels that we most certainly need to pay close attention to. We come over and look at the fear and greed index. Right now, we can see we're sitting at 50, dead smack in the middle of fear and greed. Now, with one less thing to worry about today would be the economic counter, as we have no economic news to contend with out here today. However, as you can see, we're in the middle of a big earnings season. Keep in mind, Tuesday after the bell, we're going to have Tesla reporting earnings. And we look at the big movers. Tesla is expected to move plus or minus 9%. And on Tuesday after the bell, not only is Tesla reporting, but also Google, which is expected to move plus or minus 7%. Now, we come over here and we look at Verizon and pre-market. Verizon is down 2.81%. And keep in mind, Verizon had earnings out before the bell. Then we come over and look at the dollar index. What do we see? Dollar index is currently down 6 cents on the session. And we'll see, will the dollar index start to find a little bit of support? We see the MACD indicator is starting to flatten out, which could bode well out there for the dollar bulls. But if the dollar is going to start to rally up, won't that be a headwind out here for stocks? And on Sunday, what do we see? Biden quits his campaign for re-election, endorses Harris. Here is what happens next. Now, we all know that the stock market hates uncertainty. So let me know in the comment section down below, who do you guys think is going to be the Democratic nominee that Trump is going to have to go against in the presidential election? Let me know your thoughts in the comment section down below. And if you're not yet subscribed to the channel, hit the subscribe button down below and give the video a big thumbs up. Now, before I show you guys exactly what happened last time, I want you guys to pay very close attention. Yesterday, we talked about the famous Black Swan investor, and I want you guys to just scroll on down. Not the fact that he says the market is going to crash, but he also says he thinks the rally will continue for a few months. Now, that also bodes very well for what we've talked about with a potential head and shoulders pattern. Left shoulder, head. How long will it take for a potential right shoulder to form out here on the QQQs? So last time we had a sitting president drop out of the presidential elections was Lyndon B. Johnson. And if we look at this graph right here, I want you guys to pay very close attention. Here's where Lyndon Johnson withdraws from the race. However, he withdrew back in April. This time it's substantially different. The president has now actually dropped out over here in July, but I want you guys to see, you can see the market went up substantially after that. But come over and we look at a price chart real quick. I want you guys to pay very close attention. Right here is 1968. And if we look at when he dropped out somewhere over here. And where did the market rally to? All the way until December. What happened after December? If we go ahead and measure right there from the decline lower, that would be about a 37% drop on the way back down. That would correlate very well to what this famous Black Swan investor is also saying, where he says he thinks the stock market could drop by as much as 50%. So again, in the short term, do I think stocks could potentially rally? Yes. However, we need to pay very close attention to the charts in front of us. For example, on the QQQs on the daily time frame. Yes, I believe we're going to set up a head and shoulders pattern, or at least attempt to. But look at the MACD indicator. We can see on the daily chart, we have a bearish cross of the two lines, and it's pointing down at about a 45-degree angle on the way down, and it's at elevated levels. That would make sense that in the short term, we do see further, downside to the market. However, if we look just based on price, notice we have a gap right above us, and that would be right back in within this minus development area. Can we come up into this area, not fill in the gap, which would get the bulls, a little bit irritated, maybe even trapped, and then they send it back down on the right shoulder. We come over and we look at the hourly chart. You can see the hourly chart, the MACD indicator is flattened out, which we talked about over the weekend. Then on the 30-minute chart, look, the MACD indicator has already been crossed to the upside, and we talked all about this in Sunday's video. Now, if you look at the shape of the volume profile, you can see it's a B as in boy, and value area low will come in at 474.42. The point of control will come in at 475.31, and value area high will come in at 477.77. Now, notice right now we're already above value area high, and what a B-shaped profile signifies, if we break above value area high, it's highly probable we come back and explore the upper third of the range. Well, we are already there, and we might be asking ourselves, should we play the gap to the downside? Is this a case where we need to fade the gap? Well, I'd caution you guys on that, because we do have a minus development area above us, anywhere from about 48.20 up here to about 482.73. Now, the first time we come into this area, it could one, act as a magnet, and then two, cause a rejection down. But hold on, we've already come into it right over here on Friday and we rejected down. So does that mean this time we're just simply going to push through it? This is the area we want to focus on. Now, I would suspect we come up here. When we get closer towards the top, we get a little bit of a knee-jerk reaction back down. And then ultimately, I do think we're going to try to work our way back over here to this next minus development area at 486.42 up to about 486.93. Now, I'm not saying we're going to make it there today. I said work our way up towards that area. However, where we know we're wrong or we need to shift gears would be right down here. If we start trading back below value area high today, then I do want to focus on the rotation back down towards the point of control. I want to make everybody aware, Apex 7A massive 80% sale off all their valuation accounts, passing as little as 1 day. And you can also get a 150K account for only $40. You get a 250K account for only $40. And you get a 300K account for only $40. So if you want to take advantage of this offer, use the link in the description box down below and use the promo code Mike at checkout. Then as we jump over and look at the futures markets, notice on Friday, we were able to come right to the edge of this minus development area. Now we're starting to get a bounce. That's expected. Also, we talked about this in Sunday's video. We have an untested value area low from the weekly time frame. And I said, I expect this week or possibly next week, we're going to come back and test that level. But I felt very confident that this week we will test that level. Then we'll probably come into this next volume area over here. Anything above that, then I'm really going to be watching this minus development area anywhere from about 20,174 to about 20,201. So you might want to make sure you have that area marked off on your chart. Now, the first time we come into that area, we're likely to get some type of reaction. We'll see how much the market pulls back from that area if and when we get to that area. Also, if we pull a Fibonacci retracement from the latest swing high up here down towards the low, you can see that first minus development area falls just below the 50% retracement. If we pull the whole entire move, you can actually see that the minus development area is just above the 38% Fibonacci retracement levels. Then as we come over and look at the NASDAQ, right now we are currently above Friday's value area high. We're above the overnight value area high. So what does that say? We're likely going to go higher. Now, when we talk about the overnight volume profile levels here in a bit, if they are trading below Friday's value area high, then what we can do is we can use this as our line in the sand, meaning if we come back down below value area high, then we can target the overnight value areas as well. But I also want you guys to pay attention. We do have a little bit of a minus development area right within value from the overnight session. Now that area is going to be anywhere from about 19,806 to about 19,796. Now we come over and look at the SPY, also similar to the NASDAQ. You can see it's up here at elevated levels. What do? We get a bearish cross to the downside. And now in pre-market, we're actually trading higher where the SPY is up $3.43. On the 1 hour chart, you can see the MACD indicator trying to firm up and base out down here at near the lows. Then on the 30-minute chart on Friday, we're able to get a bullish cross. Now, just like we talked about with the NASDAQ, we have a lowercase b as in boy shape profile, which signifies if we get above value area high, we're likely going to explore the upper third of the range. Well, you know what? We're basically right there right now. Now, value area high will come in at 550.30. The point of control will come in at 548.62 and value area low will come in at about 548.15. So as long as we are above value area high, then guess what? I want to lend to that possibility. We are likely going to get a retracement on the way back up. And if we look, we do have a major gap on the daily chart. However, in the event that we don't make it all the way up there, let's go ahead and pull our Fibonacci retracement. And let's look, where are the key levels we want to focus on? Well, one would be the 38% retracement at about 554.44. And then we know the S&P loves a retrace of 50% retracement, 556.42. And I really believe we're probably going to make it to the 50 in between the 61.8, which is also right near this high volume node sitting over here on the composite profile. Now we come over and look at the weekly profile, similar to what we talked about with the NASDAQ. Last week, we closed well below value area low, which signifies that likely this week or next week, we're going to come back and test that level. And I really believe it's probably going to be this week. Then you can see we're going to come into this minus development area on the composite, but also this area right here. I'm going to go ahead and mark this area off on my chart. This area right here is going to be a high probability area I want to focus on, anywhere from 56.16 up here to about 56.22. Now, the first time we come into that area, it should one, act as a magnet, but then we should get some type of reaction on the way down. I'm not saying it takes us all the way back down. It could just be a couple point move down and then we rally back up. The second or third time we interact with this level is when I expect the market to break. And then that's where we want to focus on this next high volume area on the composite profile, which also is just below the weekly point of control at 5648.50. Now, if we pull a Fibonacci retracement from the swing high down towards the swing low, notice the 50 and 61.8 level kind of encapsulate that high volume area along with the weekly point of control as well. Then as we come over and look at the daily profiles, what do we see? Well, we still have Friday's untested point of control down here at 5549.25. Now, as long as we're trading above Friday's value area high, there's no need to worry about the point of control below us. However, if we do start breaking this level, then I would want to target the overnight volume profile levels and even some of the high volume nodes from Friday's volume profile levels. All right, so let's come over and take a look at the overnight volume profile levels real quick. And as we can see, it looks like value area high from the overnight is below the daily value area high. So that's going to set up the case that we talked about earlier. If we start breaking Friday's value area high, I want to go ahead and target the overnight value area high, which comes in at 19,840.00. The point of control will be down here at 19,785.50, and value area low will be down here at 19,743.50. Let's not forget, if we do break the overnight value area low, then I most certainly would want to pay attention to the untested point of control down here at 19,704. Also notice we do have a minus development area just below the overnight value area high, and we have a minus development area right near where the point of control was. So it's no surprise the point of control kind of built out this minus development area. Now for the overnight session, let's not also forget anywhere from about 19,809 to about 19,796. When the market gets down there, if it does, we can see a knee jerk back on the way up. So if you're trying to hold out for this point of control and you start to see a little bit of rejection around that area, just be cautious. You might want to secure up those stop losses. Then we come over and we take a look at the S&P 500. What do we see? Value area high is all the way down here at 5573.75. The point of control is at 5571.75. Value area low will come in at 5557.25. Now, when we look at the daily profiles, notice right now we are currently above value area high, which came in at 5579.25. And if you look, that's above this area. So if we start breaking back down below Friday's value area high, then I want to go ahead and target the overnight value area high, point of control, and potentially value area low. But note, if we start coming below any of the value area highs, and then we start coming back up, we would then need to shift gears and be back on the buy side of the market. Now, if you guys want to learn how to trade volume profile using order flow, watch this video right here.